Today I'll be going through a quick breakdown on a trade for my strategy on how I trade. So as you can see, this trade happened today, Saturday. So let me take you through a fast breakdown of how to trade profitable. And as you can see, this is a trade that happened for like 6 hours. So let's go to the 4 hours. So first of all, what you want to know when you're trading is you want to determine your bias. So determine my bias, I go on the 4 hours and I kind of look for what price is doing, what this price currently doing. So I kind of look for structure, and apart from structure, I look for patterns. So patterns like inverse fair value gaps. I look for patterns like price making market structure, either a higher low, lower high, lower low, stuff like that. So as we can see, this current price action that was happening here, I kind of look um the different arrays. So different arrays in sense of the bullish arrays and the bearish arrays. So there are different kind of bullish arrays, like you can say a fair value gap is an array. You can also classify highs and lows also as an array. But for my bias specifically, I kind of go for like a fair value gap. So now, right now, as you can see, going into Saturday, I saw that um, we were disrespecting a bearish array right here on Friday. We inversed this bearish array. So since we were inversing this bearish array, what I was basically looking for going in on Saturday was longs. So in the next, in the opposite sense or the inverse sense or vice versa sense, is if I'm saying that price actually like inversing a bullish array, then I can be looking for short. So I basically go on the 4 hours as a day trader to determine my bias with these PD arrays. So it's called PD array, fair value gap. As you can see, we invest this 4 hours bullish array. So I was looking for longs. So after determining my bias, all I do is I go down to the 15 minutes. I look for a point whereby a point of liquidity, because as an institution trader, what the big banks and institutions are seeking for is liquidity. So liquidity is the lifeblood of the markets. Price needs to kind of take liquidity before it can move in the intended direction. So as we can see here, going on Saturday, I kind of identify a point whereby liquidity can be swept in the opposite direction before going to the intended direction. So as you can see, this was a liquidity point right here, and you can also like identify more other liquidity points, just like this one right here and this one right here. So let me see if that's actually a liquidity point. So yeah, and this one right here. So this one right here. So once you identify your liquidity point, you don't really know where it's actually going to start going up from, but you just want to make sure you identify your liquidity point and wait and choose that as a point of interest for you to actually what enter the trade. So right here, I got this liquidity point being it, and I got a confirmation right here with just a 15 minutes bullish candle, and I took the longs. So that was how I was able to secure this 6 hours. there are other things that go along with this strategy, but basically it is just of the basic things that you want to know is what you want to determine a bias for the day. The next thing that you want to also do is you want to find a liquidity point that you want price to sweep before taking your entry. The third thing is that the timing that it's actually happening. And maybe I will talk that about that in the next video. Or if you also want to like learn more about my strategy, I have like an inner circle of group whereby I get to mentor people on how I trade and strengthening their psychology on trading, stuff like that. So apart from the timing, I also kind of look at the P to stop loss. So as you can see right here, I was making a measurement. I make use of this tool which is called price range. So I kind of check what my P to stop loss is by taking the low to the high, and that is just about 0.07, which is actually a good peep to stop loss for me to actually use. That means I'm actually risking very less, very little amount of pips, and I'm having an high chance of getting like a six risk to reward, which I as you can see, we actually hit a TP. So you can see there are other trades of how you can also trade this, but this is just basic strategy that I trade every day and it's profitable, and a lot of strategy out there that it's also profitable. It does not have to be this one, but this is actually one that I use every day for like the past year now, and it's working very well for me. So if there's any questions that you have that I've not like clarified in this video, you can leave a comment down below, and then I will do a video explaining that in the next video. So thank you, and I hope you've been able to get value from this video.